What's going on, traders? Camilo here. Happy Friday. The end of our trading week. Officially, the first week of the year is over, but we have many more to come. So don't worry. The markets did have a pretty rough start to the year, but that is okay. Now, let's take a quick look at our daily time frames for the SPY, Qs, SMH, IWM, and the Dow. We want to analyze where we are within the moving averages, okay? Because these are traditional indicators. As you know, these are a lot of people, a lot of institutional traders, retail traders, hedge fund managers. A lot of people watch these moving averages as their guide for the markets in the higher time frames. They also work in the lower time frames, but let's take a quick look at it in the larger picture. Okay, zooming out towards COVID lows, right? 2 years ago. Wow, time flies. We see that the market rallied. We first sold off and bounced off the 100-day. We then bounced back, sold off, bounced, held at a support, and now we are trying to see if that is going to be the case this time around. Now, is it going to be this case? Maybe. I do think that we will defend the zone. Okay, I do think that we may just fight it and hold on to it ever so slightly, but then eventually pull through. Again, that is my interpretation and it is my opinion. Okay, so moving over to the SPY. The SPY is holding its 50-day simple moving average, closing above it, so it's pretty bullish at the moment. It's okay. SMH closing ever so slightly underneath it. I mean, this is a pretty ugly candle to break through it. IWM is the one that's a little bit of a concern, given that all the moving averages converged here and it is holding it as resistance. So pretty big resistance there. We may see further downside in small caps. Now, the Dow. The Dow is the only sector at the moment that is holding its highs above its 3 moving averages. Okay, so that's pretty good at the moment. And last but not least, we see that growth and value outperform growth today, and that is indicative of a pretty clear rotation into value stocks. Okay, guys, so that is pretty quickly what I am seeing this week, or what happened this week rather. Now let's go down towards our Qs, and we're gonna review the wave count. We're gonna take a quick look at both interpretations, the bearish and the bullish count. Okay, now let's go down to the 1 hour time frame and let's turn on our labels. Okay, so from yesterday's video, we were noting that we were going to see potential further downside, given the fact that this price structure here did not seem complete to give a signal that the subdivisions of this structure was in fact over. Now, out of the November 22nd highs, okay, we got 3 waves down to 8. Actually, let me zoom out for a second here. Now, this is a little better. Let me get these price action here. All right, here we go. Ready. Now, taking you guys back to September the 30th, we got our first 3 waves pullback, okay? We established this pivot zone here as our level of support, okay? 350.59. We then since saw the market rally in 5 waves, 1, 2, 3, 4, and 5. This is a clear uptrend impulsive structure. Now, after every impulsive structure, then comes the correction. We have yet to see any signs of a decision and direction, bullish or bearish, in the markets. Okay, there's a lot of indecision with a lot of things going on. So this is the result of that. Okay, this is the result of that pure indecision, and the indecisions give a lot of headaches to a lot of retail traders, a lot of impatient traders out there. So if you guys need to be patient, okay, that's what I stress enough. You guys need to be patient until the markets really direct themselves. We have been faked out a couple of times, but nothing too crazy. Okay, guys, so out of this wave 1, after we completed on November the 22nd, 5 waves down to the wave A, 3 waves up to the wave B, and now we're making our final 5 waves to the wave C of wave 2. Okay, now the zone, I am anticipating that if this is in fact the wave count, okay, in this flat correction, we see that we may be reacting towards the 50% and the 618 of the higher degree. Our lower degree fib support levels come in at 375.69. Again, all of this zone is in fact coming to confluence with a pivot point here in the markets. Okay, after the September sell-off, we bounced back, found it as resistance, and then we made a new low out of this pivot. So it is pretty important for us to keep our eyes open to that. Okay, guys, I cannot stress that enough. All right, now let me tell you guys, or do a brief summary from yesterday's video in case you guys missed it, as to why I do not see that either of these 2 points here was the top in the markets, and now we're going to see a rollover. For that, I'm going to zoom out and then bring our fifth wave over here, right? Because we're still looking for another leg up. Now, I'm not going to say, you know, if in fact this was all of the 5 waves up into the wave 5, it's unlikely, right? Why is that unlikely? Because this will call for a very, very short 5 waves. If we take a look at the daily time frame, you see, which you already saw, you'll see that this will not fit the guidelines. All right, the wave 5 will be too short. Now, if this was the wave 5 top, then by now we would have seen price action head on lower drastically, okay, to our overall higher degree correction. And that's not the case at the moment. We see consolidation, we see some sort of correction going on. Now, you may be asking yourself, okay, bro, so what if this was the top? Okay, what if this is 1, 2, extended third, fourth, and then fifth, and then the fifth wave was a truncation, or was a truncated fifth? And I'm gonna answer that question to you, and that's not the case. All right, I don't think this is a truncated fifth. And why is that? Because a truncated fifth still has 5 subdivisions into it. And say, for instance, this was the wave 1, wave 2. Okay, wave 2 went beyond 100% of wave 1, so that's invalid already, and you do not count 5 waves over here. All of this is 3 waves, or 1, 2, and 3, or A, B, C. So that's the reason why I do not think that this is the top just yet. All right, guys. Again, there's clear evidence that this isn't it. Price action and the way the charts are setting up themselves to be. All right, now let me take a quick look to our bullish count, or not our bullish count, but our alternate count at the moment in the SPY, in the Qs rather. Taking you down to the 1 hour time frame. This is unlikely at the moment, okay? We're going to dismiss this count very, very, very soon, because once we surpass the origin of wave 1 in this wave 2, okay, again, one of the guidelines is that wave 2 can retrace up to 100% of wave 1. It cannot go beyond 100% of wave 1. It's very unlikely where we see a case that it goes just ever so slightly, just close to the wave 1 origin. So we are getting very, very close there. So which means it tells me that this is almost canceled, and our preferred count is at play, and that's saying that we may bounce from here. All right, guys, and that we were in fact looking for this flat correction that I've told you many times in our previous videos. All right, guys, before we continue on with the SPY and touching base on SMH, ideally on the down, please consider subscribing to the channel, give me a thumbs up on this video, and hit that bell icon so you'll be notified when I upload the videos every single day. Over to the SPY. Let's take a look at our preferred count in the SPY. And in this count, we are suggesting that we may see further price action. Now it is okay. Now it is okay for the SPY and the Qs, or the S&P 500 and the Nasdaq, to diverge from one another. They don't always need to be correlated, meaning they don't always need to be going in the same direction. One can go on towards this correction for longer than expected, while the other one can start heading on higher with this, starting the next trend. Okay, and that's what we're seeing right now, just because of what's going on with the Fed. All right, so out of the October lows, we got our clear 5-wave trend, ABC or WXY to the wave 2, which came towards a little bit shy of the 50% retracement. Now we're still a little bit above invalidation, and invalidation means that if we cross below if we cross below the origin of wave 1 and the wave 2, then this count is invalid, just like we're about to experience in the Qs. All right, so we are in 5 subdivisions up here. Actually, let's go down to the 15-minute time frame. It's a little bit more clear here with our subdivisions. All right, so so we got 1, 2, 3, 4, and 5. Okay, ABC. Let me hide this. And we were looking for a wave 4. Okay, that wave 4 may still be ongoing, as this may be an A, B, and then 1, 2, 3, 4, 5, just very, very slow motion or ending diagonal type move. All right, or this may have already been in fact a wave 4, and now we are gearing down towards our final 5th wave of wave C of wave 2. Okay, I'm not going to be shorting any of this move here, because by the looks of it, it's looking a little bit choppy to the downside. All right, in the smaller degree of time frames, this normally will chop up any premium in options play, trying to find any downside. And as you can see here, we are within major support zones. Okay, I'm gonna highlight this for us right now. So this zone here, so you can clearly see it, all right, where price action found support at the 50% retracement is levels of support, support, resistance, resistance, support, support, and so on. Okay, guys, so shorting it around this area would be a little bit tricky. I would expect for the markets to find some level of support here, or maybe some minor continuation to the downside, and then off we go. All right, guys, over to the other count on the SPY. Let's take a quick look here. The SPY in this case is suggesting further downside, just like in the Qs. This is a flat correction. Now, we made out of the November 22nd high, we made our first A wave, ABC to the B wave, which was 1272 retracement resistance of this wave A. All right, we've established a trend line resistance here. Now, our first wave for wave one was established. We may be looking for wave two to come towards the zone. We have confluence with the trend line resistance and two fib levels here at 472 and 470, at which point we may find rejection and head on lower. So if this is the case, downside target comes in towards the 449 to the $439 region. All right, guys, so keep your eyes open for that as the markets develop for the next week. Okay, next week will be crazy, ladies and gentlemen. I do say that. Now, SMH, let's take a quick look if I have a developed chart here. Here we go. So SMH, it's not looking too well either. All right, we're still looking for further downside. 100% extension of wave A versus wave B comes in at 293. Wave 2 still a valid wave count if we still remain above 288.38. All right, resistance came in at 307, 305, at which point we sold off, just like we talked about on yesterday's video. All right, so I expect further downside in this name. And then last but not least, IWM. As we talked about in their moving averages, it is unlikely that this is the case now. All right, maybe it's a surprise, but we shall see. For now, let's take a quick analysis, right? Let's suppose that this is the wave one, ABC into the wave two. All right, you see that this is clear support, 215.82. Support here, and support here, and then in its price history, it is also holding it as support. So if we start breaking south of 216-ish, or let's say 215, 216-ish, then we are going to start getting worried. All right, guys, so that's it for me tonight. My voice is a little clap at the moment, so I hope you guys have a great weekend. If you guys have any questions, please leave a comment down below, and I'll be sure to get back to you as soon as possible. As always, thank you so much. Appreciate your time. Enjoy your weekend. See you guys on Monday. Peace out.